like to turn our attention to the third segment, where we talk about volatility in the market and we talk about Tradespoon technology. Tradespoon technology, the core engine is analytics that geared toward analyzing 8,000 stocks that trade on NASDAQ and New York Stock Exchange in terms of price movement in between the earnings seasons. If you can avoid binary events such as earnings in between the earnings seasons, you can actually with high certainty see if the stock has high predictability factor. And if it is, then you can find information about the stocks and whether the stock is going to be higher or lower in the next 50 days. And we're following the seasonality of the stocks and we're following the options expiration cycles. So the volatility that we've seen in the market after the FOMC meeting now has collapsed and very low, as Joe alluded in our Wall Street week ahead. And now that VIX is hovering around 12 and 13, Joe, what do you see in terms of volatility going into the next week and going into the next expiration cycle?
You know, if you just take a look at the VIX, the VIX, and the options that are trading there, and one thing that I want to tell people about the VIX options, the cash VIX that we see and we talk about here on the show, and you'll see in the paper or talked about on other publications and news outlets, that's the cash VIX. That's not what these options are trading off of. They're actually trading off of the VIX futures. That might be a little bit confusing. And if you have any questions, email me at support@tradingblock.com, and I'll get back to you with any of those questions. But Vlad, right now, volatility has been pulling back. It has been pretty tame. But we're going to come up on the March earnings season very soon, or excuse me, the April earnings season very soon. I expect that volatility, while I think that it's going to stay low for the next 3 or 4 months going into the summer, I think that we're going to have, maybe a pop here or there. Right now, they're pricing in, basically through April expiration in the VIX options, the potential to move about $2.25. Now, that's not directionally biased, so I don't know if that's up or down. And it has been downside lately pretty dramatically. As you said, we alluded to that earlier in the earlier segments. I think that challenge right now is potentially going to continue, but I think that right now, front-month implied volatility is going to stay right around that 14, probably 14.5 to 16 level. That's where you're going to see vol hang out. And we're going to look at strategies that take advantage of low implied volatility markets, and really then we'll define our bias by using technology like you offer here at Tradespoon.
Thank you, Joe, for that insight. And if you want to find out more information about the topics that Joe and I have covered, please visit tradespoon.com to find out more information. Thank you for your time, and we will see you guys next week.